Welcome back, everybody. It is Money Mondays, so you know what time it is. It's 3:30.
Tool time with Tim, the Tool Man, Ferris. I don't know.
Nope, with your hosts Ben Suttles and Ferris Musa, and we are Disrupt Equity, showing you everything about real estate, commercial real estate, multifamily, tech, partnerships, and everything in between.
We're just excited to be here with you all.
Yes, absolutely.
Right before
favorite part of Mondays.
And right before our big weekend.
Ooh, what are we doing? What are we doing?
Doing our big conference this week. And so for anybody that's in the United States, go to mfinvestornetwork.com. Go book your ticket. We got almost 700 people already, so it's going to sell out. So
last call is literally the coupon code, so check it out. It ends today. All right, apparently. Yeah. So get on that if you're going to do it. But what are we talking about today, man?
Talking about raising money for real estate deals in uncertain times.
So how much money did we raise last year?
140 million, I think is the
140 million. We know a little bit about raising money, people. So this is not just coming from people that say they know how to raise money. We actually do know how to raise money. Sure. And we've got hundreds and hundreds of investors that can attest to that. But bottom line, it's not as easy as it was 18 months ago. Obviously, the market has shifted a little bit, slowed down, interest rates, inflation. Unless you're living under a rock, you kind of know that's a little bit of a slowdown, right? So what are we hearing? We'll kind of go through, some of the, the feedback that we're getting from some of our investors, and just, ultimately, how do you get across those arguments or those, those I guess challenges that people have to actually take action, right? So, as in any part of the cycle, right, you ultimately have to attract people to your investments, right? So you want to have a good personal brand. You want to have a good brand from your firm. You want to have a marketing strategy, right? Because it's a lot easier to go out and have people come to you than for you to have to go out and target it and ultimately hunt down investors. That's a lot tougher way to go about raising money. That's not scalable either. Right? So you want to have a good marketing funnel or funnels, and you're watching one of ours right now, right? This is, we love doing this, but it's still a marketing funnel, right? But you have to attract investors, right? So what would you say, I've got one in mind, what would be the best way, or what's been the best way for us to attract new investors?
I'm telling your investors to tell their friends. That's
one
of our favorite ways. But I mean, it's like Coke, right? Coca-Cola, yes. For those of you watching. Right, it's really, it's not the first time, not the second time, not the third time, right? But it's about creating the awareness, sharing what you do, talking about it to people. And I think a lot of people are shy, myself included, didn't really care to share what I'm doing, right? But that's, you miss out on a lot of opportunities. So it's really about educating people on what you do, why you do it, how you do it, giving them the confidence, right? And that'll naturally start to attract people, right? As much as we think we're in a real estate, kind of social bubble, so to speak, right? You're probably one of the two guys that most people in your network know that is doing apartments, for example. Yeah. Right? Yeah. And so even though I know 1,000 of my friends that all do real estate, but if I pick any random person that I know outside of real estate, I'm probably one of two people they know. And so again, you still add tremendous value, but you have to create the awareness for them that you're doing what you're doing.
Yeah, so I mean, folks, I think he brings up a great point. You just got to tell people what you're doing, right? So you're starting off, you have to let them know that you're doing commercial real estate or multifamily or real estate in general, right? You'd be surprised how many people are still interested in it, maybe want to invest with you, maybe they have a deal. Whenever I got in the business back in 2014, I was amazed. I had high school buddies that had already invested in this stuff. And they're like, hey, I'm in. I've already done a couple deals. I'm like, wait, I never even knew that. And I've known these guys for 25 years, right? So just telling people, making people aware, and educating people in your sphere is one way to do it, right? Now when you grow beyond that, because you're going to tap out your sphere unless you're just friends with a bunch of multimillionaires, and there are people that are like that. I was not fortunate to have be a multimillionaire in my sphere, but you have to go about marketing. Right, you have to build a list. You have to talk to that list, and you have to provide value. It's not this, BS stuff that you just email out, or you have some stupid posts on Facebook and you think that that's going to get a bunch of engagement. Right? You have to have a programmatic, approach to how you attract people and you add value to them and you keep them engaged. So whenever you are ready to put that deal out there, they're ready to take action, right? And then building up some scarcity too. I think that's another part of it too, right? Whenever you are raising money, things need to understand that it moves quick.
But I'll add, whenever you're raising money, that is not the time to be talking to your investors. You should have been talking to them well in advance, preparing them, right? Knowing them what to expect. So whenever you're raising money, you're not asking them to invest, you're giving them an opportunity.
Yeah.
right? And so it's all about the prep work, like most things, right? Painting a house is very easy if you spend the time to do the prep work and, go cover up everything. And, same thing with real estate, right? With raising money, it's about laying the foundation, sharing the kinds of deals that you do, what the expected return profile is. And you'll know pretty quickly which guys are serious and which aren't. And then once you actually have a deal, you can quickly kind of close and move forward. So.
No, agreed, 100%. Right? You need to be laying the groundwork way ahead of a deal. Right? Don't trust in that fallacy that some people will say, which is, if you got a great deal, the money will come. Do not take that advice. That's very, very bad. Right? Because there's a lot of people that do have good deals and they don't get funded. Right? And it's because they don't have an engaged audience. They don't have people that knew that they would have deals and are ready to take action. Right. So, and, on top of just, kind of talking to your sphere and leveraging, the people that you already kind of know, right. Some of the things that have been really, really successful for us beyond investor referrals, right. Podcasts, blogs, writing articles, social media, that stuff works. Now it takes time and it takes effort. So don't think that you're going to write a blog post and, next day you're going to have dozens and dozens of investor, leads. It doesn't work like that. It's one of those things that's the long game. But if you can stick with it for called 12 to 24 months and be consistent about it, that will start leading to a lot of leads. I think that's what we're getting a lot of our stuff from these days.
Right, it's constant, again, play the long-term game. Real estate, whether you're raising money or finding deals, it's not about get rich quick. It's not about raising money quick. It's about playing the long game and then doing what you say you're going to do, perform for people. And that goes across the board, whether it's marketing, whether it's managing a deal, operating a deal, et cetera.
Yeah. All right, so what are some ways to engage? We talk about like, hey, you don't want the only time that you talk to your investors to be the time that you have the deal, right? So what is some stuff that we're doing to kind of educate and keep people engaged with our
sharing
with our
just
firm?
Like we do a monthly newsletter sharing what's going on with the company and the market, right? That's a simple one that most people should be doing. It's low-hanging fruit. It's very obvious, right? In addition to that, we do all sorts of stuff. We do a show called Money Mondays, right? If you're watching the show, you might be on that.
Touché.
Right? We do webinars. We do meetups. We do a lot of ways to have multiple touches with people a month, right? You don't want them to hear about you once a quarter, right? Because money comes and goes for people. And so it's about getting them constantly aware of what you're doing, giving them, primed, ripe, so that whenever you do have an opportunity that makes sense, you can move forward quickly. And so you have to really think about touch points, right? You have to measure that. Something we measure at Disrupt. When and how often are our touch points with investors? It's something we're stepping up and getting even more methodical about, right? Because again, you want to keep leads warm. So
yeah, and I think it's a combination, folks, of kind of obviously talking about your business and what's happening. I think I love market updates. To be honest, like those are some of the newsletters that I subscribe to, and I love hearing more about that. Again, as we've said on the show, you have to understand.
I get tired of Ben forwarding them to me for people.
You have to understand the macro environment, what's happening, because that is going to filter down to what's happening in your submarket, right? It might not be a one-for-one correlation, but let me just give you an example, right? If things are falling apart in the market, right? Lenders aren't going to be lending a lot of money. And if they are, they're going to be lending a lot less, and the interest rates are probably going to be a lot higher. So you have to understand why that's happening, right? So market updates people tend to like that type of stuff, but also just being genuine. I think people have gravitated towards us because we're just so transparent in some ways, maybe too transparent. But
absolutely.
I would much rather be, I must be condemned to being too transparent than not transparent enough, right? Because there's good things and there's bad things in this business, and people need to understand that there is risk in what we do too. So, just being candid, tell them what you're doing. Talk about your family, right? You don't want people to feel like you're up on a pedestal and they can't approach you and you're too famous or whatever, right? Look at Cardone. Cardone always talking about his kids and his wife, and he does that for a reason, right? Not only because I'm sure that he probably does love them, but it's also because, he's trying to be you can gravitate to that, you can relate to that. And I think relatable posts are probably the best ones that they're going to get engagement to, right? So those are some of the ways that you can engage effectively with your potential investors. So another question that came in. So what are some key pieces of information that real estate syndicators share with their investors, right? I would say just track record in general, right? And if it's your first deal, and I know there's a lot of people that watch our show that might be getting new, and they're gonna say, well, I've never done a deal. What track record do I have, right? The one thing that when I was getting into this business back in 2013 and 14 was, my partners and I, right? was one of the most, that statement stuck in my head because it was so powerful, right? And what does that mean? It can be fairly vague, but typically this is a team sport. You're not going to get a loan unless you're partnered with somebody that's probably already done a deal, right? So your partners and my partners and I, right, can be somebody that's already got a track record, right? And they're gonna be like, well, who are your partners? Oh, well, I'm partnered with so-and-so, and he's already done 10 deals, right? So that is gonna give you credibility because now you're partnered with somebody that's already done it. So it's your first deal, but it's their 11th deal, right? And I think that's important. So keep that statement in mind. About track record, and if you don't have one, use that statement. I think it's very, very powerful, right?
Absolutely. That's what we like to say. It's a team sport, right?
Yeah.
It's, get to know people that can help you plug the gaps that you have, right? We all grow together, bigger pie, and that's where you can leverage someone else's reputation, experience, track record, all of the above. So.
Absolutely. And then I'd say the only other thing, well, there's plenty of things to share, but, is mitigating risk, right? How are you going to mitigate risk? And one of the other important things that kind of stuck with me was a very high net worth gentleman. He had sold his business. He was worth tens of millions of dollars. He just, I was pitching him on the deal. I was pitching him on returns. He's like, man, let me just stop you. He's like, before we get into return on my money, I want to talk about the return of my money, right? Because whenever you're worth tens of millions of dollars, it doesn't even matter if you're only worth a couple $100,000, right? You don't want to lose money, right? So returning of people's money is more important than the return on their money. And so you have to show them how you're mitigating risk where, hey, this could potentially happen, but this is how I'm mitigating it, right? And so a lot of astute investors are going to be looking for that mitigation piece, right? And you should be ready with those pieces of information.
Yeah, it's about understanding your investors in advance, right? Preparing, them, preparing yourself, and knowing how to mold a story and finding a fit, right? Your deals may not be a fit for certain investors, and that's okay. Right, but really kind of knowing what your investors are looking for and basically working back into it. I like to say we're glorified matchmakers. We match deals to equity.
Absolutely.
That's what we do, right?
Yeah.
So equities are investors. Deals is it a C-class value add in the middle of Detroit, right? We're not doing that, but hey, I may have an investor that wants that, right? I actually talked to someone really recently.
They're doing that one?
This was last week, I think, and he's a Detroit guy. And he was kind of explaining when you
can buy the whole block for a couple grand, I guess you probably can't go wrong.
He was pretty bullish on it. So, but
Detroit,
again,
I don't know if it's coming back or not, but whatever.
You got to find matches, right? That's what it's all about in this business.
And agreed. Maybe your investors love Detroit, right? You can find some good deals, and
maybe you need an A-class and core plus area of Austin, right? Very different return profile, very different investor base. So
I do agree, right? You need to understand where your investors are, and then you are matching deals to money, right? Because a core plus deal in downtown Austin is way different than a workforce housing play in Detroit, right? But you have to understand where they're coming from and what they want to invest in, right? And it's good to get that information because then you're not chasing your tail on these deals too, right? Maybe you have a great opportunity, but then you come back and all the investors that you've cultivated want to workforce housing, and you come back with the core plus deal in Austin and be like, what the heck is this, dude? Like, we don't want to invest in this.
And you didn't spend the months leading to it talking about it.
Yeah, you didn't educate them on the core plus deal.
What's going on with Austin and why core is, what you want to invest in, et cetera. So there's a lot of prep work, folks.
And I love that, actually. That's probably a good segue into kind of finishing up this show, right? I think it's important that people need to be laying the groundwork of what they think that their investors should be investing in, and they need to be educating them on the merits of that, right? Again, if you wanted to buy core plus assets in Austin, you need to be educating people on why core plus assets in Austin are a good investment, right? Because it's going to start getting into people's mind. They're going to do their own research. Yes, some people are going to say, I don't buy that, but you're going to have some people that are going to get excited about it. And then right when you have a deal in a core plus part of Austin, those guys are going to be lining up ready to stroke a check to you.
Yes.
So you have to lay that. It takes time.
Or to very quickly realize that you're not getting any, nothing. No one's
everybody
receptive to it, and so
everybody says that's the dumbest thing ever, right?
Yeah.
And then okay, maybe I shouldn't go after that core plus deal in Austin, right? Because nobody is showing any interest whatsoever, right? And that's a great point, right? You have to be listening to what people are telling you, right? And if they're telling you you're crazy, then you might be crazy, right? So, boom. We got a couple more questions. How much time do we got? We got a couple more minutes?
8 more minutes.
Yeah, 8 more minutes. All right. So, what are some tips for building a brand? I think we talked about it, right? Consistency. You have to put yourself out there. You have to be relatable and approachable. You have to be transparent. People pick up on that stuff, right? And I think that that's important in building your brand, right? On top of having a good track record, right? Another question that had come in before the show: should we wait for market conditions to improve? I got this at our meetup last week, right? Everybody always asks this.
You how that went.
It's there's never not. I'd say here's how I'd respond to this. There's great deals in every part of the cycle. Right? You have to underwrite to what's happening in the market at that point, right? So if interest rates are at 7, guess what? If you still have the deal,
so what's happening and what you expect to happen.
Yeah, and the expectation of what the foreseeable future is, right? But if you expect that you're going to have a fixed rate for 7% and your deal still pencils out and it provides the returns that your investors are expecting, guess what? That's a good deal. Right? Don't think of it like, oh, if interest rates aren't at 3.5, then the whole market is crap. I don't buy that, right? And don't try to time the market either. A lot of people are like, oh, I'm sitting on money because
structure the deal for the situation that it's in. Have plenty of reserves, right?
Yes.
And make sure
cash
with
is
real estate,
important.
time can fix all wounds, right? And so again, you do get rent growth over time. The question is, can you hold on long enough if you're underwater, right?
Yeah.
And so really go into deals with plenty of reserves, structure them effectively. Really project out what your financial modeling looks like, right? And you can still get into a deal even at peak of market, right? There's people that bought at peak of market and did very well still.
Yeah.
Right? It still happens. And so again, about getting to the right deals with the right structure.
No, agreed. Yeah, you have the capital stack has to be structured properly, and I think we've been shouting to the heavens about this last 12 months is have reserves, folks. It's important. But the other thing that to make just crystal clear is you're never going to be able to time the market, right? So even if you think that there's more pain to come and you're going to wait on the sidelines, you're never going to be able to effectively. It's just like buying a stock. People think that they can buy it at the bottom and sell it at the top. Even quantum computers can't, fathom all the different permutations and how that works, or you would see these people being immensely more rich than they already are, right? So point is that you need to find deals at every part of the cycle and just structure them properly, right? Last question, how does building a strong team help you raise capital for real estate deals? I think the team is key, right? Because if we're doing all the capital raising, guess what's not happening? Everything else. Right? You're not doing your asset management. You're not looking for your next deal. You're not managing the construction. There's 1,000 other things that just happen just on a deal, let alone if you're building a company around that too, right? So you need to have a strong team as soon as you can afford one, right? And I'm not saying that an investor relations person is your first hire. It probably isn't your first hire, but it's one of probably the top 3. Right? First hires that you're going to have, right? Because you need to, if you're doing effective marketing and you're getting a lot of leads, if you don't respond to those quickly and say the right things, you're going to burn that lead, right? And so you need somebody to be able to do the follow-up and do the intake, and then ultimately when you have a deal and you're trying to get those people onto your investor platform, that all takes time, right? So I think it's important to understand that, right? So, those are some of the things that I would say, there's a reason why you should build a team around it, right? Because there's always going to be 1,000 things to do, and you can't do it all.
Absolutely.
Right? Boom.
Let's keep
all
going.
Right. Back to the Q&A section.
All right. If you have comments, questions, thoughts, please go ahead and ask questions. We'll answer them here live. We'll give it a minute or two. Otherwise, we will keep on trudging ahead.
All right. I guess everybody knows how to raise millions of dollars, man.
It's not that hard, man. It's not that hard. It's about finding deals, finding money. That's all it is. 2 very simple things to do. But let's keep going.
All right. Well, if you do have questions, drop them in. We'll be on here for another couple minutes. All right. So last call, like we said at the beginning of the show, check it out, www.mfinvestornetwork.com.
It's going to be our conference, biggest one ever, biggest one of the year, 700 people. Come hang out with us, get to meet somebody new, go learn something new. Check it out. So it should be a good time. And we're doing a property tour this following Sunday. So if you want to get hands-on with the real deal, smell it, feel it, know what it's like, come check it out.
Sale ends tonight, but put in that coupon code last call for $125 off. But like Ferris had mentioned, on top of that, and there's more, we're doing a multifamily property tour of one of the deals that we just bought in December of 2022, so it's really fresh. It's called Hollister Place here in Houston. So check that out, disruptequity.com/Hollister Property Tour. We do need you to register. That is a very limited amount of space to be able to do that. That is going to be that Sunday after the event at 10 a.m. So if you are in Houston, you're going to be hanging around for Sunday. Come check that out. We'd love to kind of show you what we're doing in person.
Absolutely.
Right?
Before we go to what's next, we did get another comment. So someone asked if I meet someone at a meetup conference, can they be part of my 506B syndicate? And the answer is, it depends, right? If you get to know them, you build rapport with them in advance of a deal, right? They qualify as someone that you know.
Yes.
Right. So they qualify as what's this term I'm looking for? It's
pre-existing
relationship.
Yes, that's it. You know,
right, that's pre-existing.
That's
so
absolutely
depends,
pre-existing.
and this is where you go to events. You got to nurture the people, document it, right? Get to know them, and you could put them into a B. Right now, if you have the B, if you have a deal launched, and then you go to a meetup,
that's what I was going to say.
trying to meet people, you already did it too late.
I think the cutoff is you're under contract. So if you're under contract and you meet that person the next week, that's not going to qualify. But if you met them the week prior,
you met them and nurtured them, right? Not just met them.
There's a response. There's an email.
And again, go talk to your attorney. We're not the expert, but generally that's how to think about it.
There's plenty of SEC attorneys that can probably handle that a little bit more effectively. But that's our interpretation, right? We do a lot of 506Cs now, but we've done some Bs, and that's always been the case, right? So any other questions?
Nope. Let's
All right.
going.
Well, forever hold your peace then. So what's coming up next week, my friend?
Multifamily investing, the significance of location in driving returns.
All right. So we're talking submarkets and why that is so important, folks.
Yes, location. We've all heard it, and we'll talk about that next week.
All right. We'll see you then.
Thank you.